Good morning, everybody. We'll be starting in just a second. Hopefully, everybody's having a great morning. Hopefully, you guys could hear me okay. All right. Make sure I posted everything. All right. Let's say hello to everybody. We got Devin. We got John. We got another John. We got Cheese Gray Trader. We got Omar. We got Steven. We got JB. We got Richard. We got Bill. We got Sassy Trainer in the house. Piet DeBrock, David, Stacy, JB, Dave, Ivano, Arnulfo, Pete, Ruth, Michael, Jr., Kevin, Lydia, Naples fan, James, Krish, Sergey, Delroy, Larry, Javad, Barry. Good morning, Barry. Robert, Chad, Amos, Jesse, Harold, Solaire, Lloyd, Walt, Candy, Warren, Sherman, Raj, Rihanna, Duzzy, Jean, how are you? SB, Stan, Frank, Claudette, David, Eagle Beagle, Spider Monkey, Murray. I don't know. Are you in North Carolina anymore, Murray, or you should be driving today? Barbecue tonight, Murray. Barbecue ribs. Can't wait. Gonna have dinner with Murray tonight. Glenn, Steve, Kevin, David, Bugs. Good morning, Bugs. I saw your email. I'm gonna post it in at about 9 o'clock. Good morning, Bugs. Thank you for that. Bob, Scotty, Jill, Harry, Cam, and Robert, George, Rick, John, Jeff, Richard. Richard, good morning. Yeah, I think I am ready for another chop salad. Oh yeah. What a shit show. Excuse my French. Mike, RP, Jerry, Victor, Rodney, Illinois grain farmer, Wade, Stephen, Michael, Mike Waterford, Shamens, Next Gen. Good morning, everybody. Raymond Fung Fook. Good morning. Hopefully I got it right. Chop salad with a side of snooze fest, like on. Yep. We'll see. We'll see what happens. But boy, oh boy, what a time right now. What a time to trade or a time to sleep. This is a good time for Matt to have COVID, I'll tell you. I'll tell you, if there was a time to have COVID, this is definitely the time. Thanks, Bob. Good morning to you. Dave, good morning. Kai, good morning. Stephen, Julio, good morning. Good morning, everybody. Good morning. I want to show you a nice email I got from Bugs this morning. The first thing I do is I usually check my email. I don't respond, but I check my email to see if there's any problems with anybody, if anybody has any question. At 2:35 in the morning, I got this email from Bugs. Look at this email I got. Pulled $112,000 out of the SPY and SPX index today with 20. This is from yesterday. I mean, this is yesterday's session. 23 trades. I'm going to post this in about an hour. I already set it on Telegram. So if you want to see this note, it'll be posted. But Bugs gave a play-by-play of what he did yesterday in the pit. Same thing Roger covers all the time. 112,000. That's a nice way for me to wake up. Thank you, Bob, Bugs, for posting that. I appreciate that. You made my morning, and I'm very thankful for that. Richard says, I was actually telling the wife we could probably run more earlier today before taking our daughter. Got this round of COVID and is on vent. Yep. Oh, vent. Oh, that's not good. In the house, Bugs is rocking it. Yeah, he's rocking it. He's rocking it. And what's great is he's making money on just the choppiness in the market, which is fantastic. You could do that with the Alpha Zone Pro. You got to have quick trades, which is hence Bugs placing 23 trades yesterday. He's scalping. I don't have time to scalping. I won't have time to send you those signals. I can't do scalps, 30-second scalps or 1-minute scalps and send you guys signals. But hopefully we'll get better trading conditions and I could start sending you signals. But I've been honestly just watching your back and hoping and preventing you from getting into trouble. And good morning, everybody who's just coming in here. Good morning. Good morning. So let me first start off with, let me give you guys a link real quick. VIP room at noon. Guess what I'll be talking about today? Did you guys enjoy yesterday's session? I thought it was a really good session. I talked about energy. I talked about rhythm. I talked about rotations yesterday. Hopefully, inspired some of you. So let me tell you what I'm going to be talking about today. I'm going to be talking about the biggest hurdle that gets in the way of day trading success and trading success. All this applies to trading. Why this is very important, and a lot of folks have trouble with this. Why stocks and indexes are apples and oranges when it comes to day trading, and why we have to use different tools. I want to explain this to you so you guys understand. I don't think I did an amazing job yet of explaining it to you. So I want to explain to you why you can't use the same tools to trade index for the most part. You can't use the same tools to trade stocks and indices. And I started on that topic yesterday, actually. Um, Basically, why we can trade indexes against the main trend, but against the law with stocks. So that's what we're going to be talking about. Now, I'll give you my favorite setups for day trading stocks, and I'll give you my favorite setups for day trading indices. Okay? Day trading indices versus day trading stocks. And then I'm going to talk about how to use market internals to help you with both sides. Okay? So, the biggest hurdle that gets in the way of day trading success, why stocks and indexes are apples and oranges when it comes to day trading, why it's against the law to trade, yes, against the law to trade stocks against the main trend, against Uncle Roger's law. My favorite setup for day trading stocks, my favorite setups for trading indexes, how to use market internals to help you with both sides. Very, very important lesson. Does that sound like something that you guys want to learn today? My favorite setups for stocks, my favorite setups for indices, why they're different, why you can't use both the Pro Trader dashboard to trade indices. Does that sound like a kosher thing to learn? If you guys aren't interested in that, God only knows what you're interested in learning. But here's the link, and this is the link for Customer Service Live. Let me know if that agenda sounds good to you, okay? Let me know if that agenda sounds good to you. Tell me, let me know. Okay. All right. Bob says yes. RP says yes. Bob Elmore says hell yes. Seth, yes, yes. Tom says yes. Cheryl says Michael, Bob, Ira. All right. People like that strategy. All right. So that's what I'm going to do today. Let me give you a link to Customer Service Live, the Cam and Gustavo show. You definitely want to stop by 10 to 1 p.m. Folks, if you have a question about setup, they're the place to go. They're the place to go. Yeah, so the agenda, I'm going to show you my favorite setups for stocks versus indices. Basically, today's session is going to show you why you can't trade everything the same way. And most of you don't understand this. I started on it yesterday. I just started getting into it a little bit. But today we're going to go further into that topic, okay? Okay? So I just want to make sure you guys are on topic. And if you have a question for me, roger@rogerscott.com. Okay? Nice and easy. All right, let's get into today's session. What are the my favorite small cap stocks for today? I'm going to give them to you right now. I don't expect you to guess those. LASF. I like this. Hold on a second. Wrong stock. LASF. What is going on with me today? Hold on. These tickers are busting my. Here it is. LASE. Sorry, I don't know what got into me. LASE. ALSE. Okay. Above 525. Above 525. Okay. That's number one. And the last one, the second one is, hold on, let me just see something here. The second one is CISS. I don't think this one's going to get hit, but just in case, $6. Okay. I like this one a lot. ALSC. I like this one a lot. It's above the 200-day right now. It's breaking out. This is the one I would focus on today. Above 525, but I really like this one a lot. This one I could take it or give it, but you never know. because the reason is it went up and now it's all the way down. So I don't think it's going to be in play at all. But just in case, put an alert at $6 on it. I've been surprised more. But LASE, I really like a lot, and that one could actually hit. So we'll see what happens. All right. Um, Fed data today. What's the Fed data today? Housing starts and permits. Also, Fed speakers. These bond auctions are not going to be material. Okay. What news do we have today? Well, we have to digest Pan W and we have HD and MDT. I believe both of these. I know HD. I think MDT also before the opening bell. Let's see. Yes, and MDT also before the morning bell. So obviously we're going to be talking about catalysts in just a few minutes. Okay. And then tomorrow, oh yeah, 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 yeah. Retail, retail, retail. Bond market. What's the bond market doing? Bond market's not doing that great. The bond market is coming off right now. We're now below the 50-day moving average. This is yield. This is reduced yield. Although this is choppy, but I would be very, very careful. The more we go down here, the lower the odds that the Fed is going to lower rates in September. I'm just giving you the heads up. I mean, it's still in the 80th percentile somewhere, and we'll talk about that in a minute. But as this goes down further, the more this goes down, just to give you guys a real straight line, the more this goes down, the weaker the odds that the Fed is going to lower rates. The more this goes up, the higher the odds are that the Fed is going to lower rates. When will the hurricane ever move the market any? No, 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 no. Okay, no. US dollar, what's the US dollar doing? It's holding on steady. I think US dollar is waiting to see what happens with this whole Ukraine and Russia thing. I think they're waiting to see if because that's a big contributor to global economy. So is crude oil. Um, Notice we're not really breaking this level. So I'm going to just go ahead and put this right here because that's creating a base right there. That's not a breakdown. Okay. That is not a breakdown. Excuse me. That's just random price data. Thank you, Bob. What's the status? G-Boss says, what's the status? We're doing pretty good, Buck. G-Boss, we're doing pretty good with that. All right, gold. What is gold doing? Same thing. Wait and see. Notice we're just going above this 100-day moving average. Everybody's waiting to see what happens with the world. Okay, global economy right now and summer. So notice crude oil not doing anything, gold not doing anything, US dollar not doing anything, bond market. It's kind of in range, not really doing much. Am I expecting a lot from the market today? No. By the way, do you remember? Thank you, Bob. I do appreciate everything you do, Bob. Do you guys remember me telling you? Do you guys remember me telling you yesterday, like a gazillion reasons why I thought the market was not going to go anywhere, and why we have to be really, really careful right now with our trades, and why we don't want to trade major breakouts right now, for the most part, unless there's volume. How stocks have to stand on their own, all that stuff. Remember that? Did it keep you out of trouble yesterday? Gold has been going up overnight, last few trading days, but failing during the day. Yeah, it happens because Sean. That's because Joy Corey Sean. I'm just going to call you Sean. That's because a lot of gold is being traded internationally overnight. It's an international market, obviously. International market. Oh yeah, by the way, I almost forgot. I knew I forgot something. Folks, a lot of you get fuzzy picture. That's because your internet is trying to be cheap with you. Um, Go 1080p right here, 1080p. Make sure go to the gearbox right here where it says HD and demand HD by hitting the 1080p HD right here. Your internet, especially if you're not wired, we'll try to default you to 360, 480, or 720 just to save you bandwidth. Don't fall for it. Don't go to auto. Make sure you're not on auto. Make sure you're on 1080p. So go right here and make sure you're at 1080p right here, 1080p. And while you're there, if you're getting any benefit out of this show, if I don't put you to sleep, and if I put you to sleep, that's all Clyde's fault. Give us a thumbs up. I just gave myself one time. Okay. One thumbs up, just one. Only one to a customer. Okay. All right. And again, before we continue, let me give, because I'm doing this because we've had double the amount of people coming in the last 10 minutes. I'm just going to post this again. This is the link to the VIP room today, right here. And I'll be talking about the major difference between day trading equities and day trading indexes. It's a lot of folks think, oh, day trading use the same tools. They all move up and down. No, 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 no. No, there's a huge difference between day trading stocks and day trading indices. Like day and night difference, okay? Oh, dump in Xfinity. Let me know, Eagle Beagle, because I want to do the same thing. I'm on Xfinity too, but I want to I want to do exactly what you're doing. Let me know how it works out for you and how fast it is. Okay, Eagle Beagle? Please let me know. All right. Okay. And okay, so where are we? Where are we? Futures, G-Boss, futures, when I talk about indices, I mean futures and indexes, S&P 500, E-minis. When I talk about stock, I'm talking about stock options. So trading IBM options, trading Microsoft options versus trading E-minis or trading the SPY or trading the SPY options or trading the SPX. Basically trading Intel versus trading E-minis or trading SPX, SPY. Okay, that's what we're going to be talking about today for anybody that doesn't know. Christopher McDonough, there's no bots here. Are you a bot, Christopher McDonough? There's no bots here. Okay, can you please stop the commentary, Christopher? Thank you. All right. Uh, if they're bots, they're great bots because I've met them all in person. All right. Uh, yep, Xfinity's constantly having outages. Yeah, constantly having outages. Okay. Um, 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 uh, okay, let's continue. China. What's China doing? China is still holding up. They're not doing as great as yesterday, but they're holding up. They're still moving. We're still above the 8-day EMA. And Bitcoin. Bitcoin is falling down to the 50-day. There is support here. We're back down to the support level. We're at support right here. Okay. All right. Right here. Right here. Very, very important. Again, choppiness. Okay, what's the catalyst? We're about to get into the stock market. What's the catalyst for today? What's the catalyst for today? I know somebody already posted it. Would you guys mind reposting it again? Please repost it again. Oh, there you go, Richard. Yay, Richard's there. Um, Richard from Puente Gorda. Good morning to you. All right, all right. People are posting housing permits, SMH, XLI, XL, yeah, he's got Ivano has it right, actually. You know what? Shit, I think he's got it all right. Richard Housing, Home Depot, MDT. Okay, okay. Yeah, Russian, Ukraine. FET speakers, not so much. Semiconductors, yeah. Caterpillar. Travel. Do I have travel on my thing? I don't have travel. Where'd you get travel from? Let's see. Housing starts, building permits, retail sales, Fed. You guys got them all, but I think you guys have a little too much. But you guys definitely have them all. So here's what I've got. I've got housing data, right? Here's what I've got. Housing data, right? Pan W, computer networks, chips because of Intel, Caterpillar, industrial, Home Depot, consumer, same thing as housing, consumer discretionary, Home Depot, and MDT. Where did you get the travel from? VIK. The hell is VIK? Hold on. VIK. I don't think that's a big stock. I don't even know if I've ever traded this stock before. Let's see. No, Richard, this is exactly what I'm trying to tell you. Okay, so Richard, don't put stocks that are not in the S&P 500 as catalysts. By definition, if it's not in the S&P 500, unless it's a chip stock, it's just not going to be a catalyst. That's not a catalyst. That's why I was surprised. That's why I was surprised. Yeah, no, 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 no. Why Caterpillar? Caterpillar? Well, I'm glad you asked. Rose 1% in pre-market as the stock was upgraded. And how do you find that? Exactly how I tell you every day. You go to bar charts, the free one. You don't have to even go to premium. You go right here. This is where I get all my data in the morning, folks. Right here. Right here. Right here. So this is a catalyst. This is a catalyst. I don't even know what the hell this is. Home Depot's a catalyst. Caterpillar's a catalyst. This is not that much of a catalyst. Contract like manufacturing reported better. I don't even know. No, this is not a cat. But these are catalysts. So what I have is this: consumer house, the housing data, Pan W, right here, chip stocks right here, Caterpillar Industrial, Home Depot, consumer, and MDT. So I think Richard, you got. I think most of you. I think Ivano actually got them perfect. I think Ivano. Let me see. Ivano housing permit, SMH, XLI. Anyway, you guys got them. You guys got them. You're not missing. The only thing, Richard, is ask yourself: is the stock a big stock? Is it a big stock? If it's not a big stock, and if it's not a commoditized stock, and travel industry is not commoditized. Okay. So it's really important, guys. Why? Because tomorrow morning, when you read about what moved the market today, you're going to be reading about all of your favorite stocks right here. Okay. That's why, because that's what's moving the market. Now, it's just as dangerous to think something is a catalyst that's not a catalyst. So the presumption is, so folks, Richard, this is how I want you guys to do this. I want you to have an 80% presumption that it's a catalyst, otherwise don't name it. Because thinking something is a catalyst when it's not, it's going to send you down a dangerous path. So you want to make 100% sure that whatever you're talking about is in fact going to be impacting the market. So unless you know with 80% certainty that it will, just don't say it, because creating a catalyst when there isn't one is just as dangerous, if not more, than thinking something is not a catalyst when it is. You understand? It's going to send you down the wrong path. I'm just trying to be helpful. Okay. It's right here, Christopher. It's homepage. Here, go to barchart.com. It's the first article right here every morning. Every morning, right here. Right here. The first article on barchart.com. Every morning. And Alexander updates it all day long. He updates it all day long. Like Home Depot wasn't there when like you'll see, here's mine. Here's mine. Notice Home Depot's not here. And look at him now. In the last half hour, he added Home Depot to it. He updates it as the news comes out. Do you understand? Throughout the entire day. So you guys actually have an advantage because I look at this thing at 7 in the morning. You look at this thing at 8:30 with me. So I look at this, I mean, 7:30, not 8:30, an hour earlier. So you guys actually have more advantage. Yeah, I don't know, Richard. It's a mid cap. It's not an S&P 500 stock, bud. It's not an S&P 500 stock. Okay. Let me see something here. Okay. Let's continue. Let's continue. Let's talk about this. Let's talk about this. Earnings, and I go through it every day. And by the way, Christopher McDonough, I'm sorry if I'm mispronouncing your name. McDonough, McDonough. It's not McDonald. It's McDonough. If I'm mispronouncing your name, Christopher, I apologize. But we do this every morning, and this is how we find catalysts. Okay. And catalysts is what moves the market. We want to make sure we know everything that's impacting the market today. We want to know all the players. And we do this in a very broad way, and it's very helpful. Pointing to a muted open. Right away, the first thing I highlighted, pointing to a A muted open right away. So you know things are not moving. Housing market earnings report from Home Depot. Home Depot's coming out today. We know that already. Trump said he had spoken with Putin and obviously Zelensky. Now, this is interesting. It's not that Trump is saying they're going to meet. It's the NATO secretary says they're going to meet. This guy has no reason to bullshit. This guy right here, NATO secretary, this guy is like a general. He has he's not a politician. He has no reason to bullshit. So if Trump says they're going to meet, that I don't know about that. But if NATO secretary says that they're going to meet, that's actually pretty significant. Because my response would be I'll believe it when I hear them saying it. But actually the fact that the NATO secretary said it, that means there's actually something happening, okay? That's really yeah, for the past week. That's right, Richard. Right? Victor, you should by now know exactly how to find that. And I'm going to show you one time. I've shown you 100 times, but I'll show you again. You go right here to bar chart, you type in your ticker symbol right here, and you go right here to this thing that's called right here, key statistics right here, which is where we're at right now. And you could see right here, computer technology, S&P 400. Notice the stock FN, it's not in the S&P 500. Notice I'm not using it as a catalyst. Look, VIK, look. You can see it all right here. Look, VIK. It's not in the S&P 500. I'm not using it as a catalyst. You could see when earnings are coming out. It's all right here. Click here, right there, and just go to key statistics right there. Okay? All right, let's continue. Okay. And if you have a question, Christopher, folks here will help you. They're very useful and very helpful. Thank you guys for doing that. Let me just see how the market's doing. What time is the Fed data coming out today? In 1 minute. Let's look at the bond market. Let's see how the bond market reacts to the Fed data. I have it here as we go through our shenanigans. Let's go back here. I'm looking at it on the side, on my side window. Here, all the catalysts yesterday, all the catalysts from yesterday, right here. EQT slid, Intel fell, Meta dropped, Dayforce, which I don't follow. Meanwhile, S&P Global Ratings reaffirmed the A+ ratings, and while maintaining stable outlook. Investors face crucial week as Kansas City Fed annual symposium kicks off Thursday in Wyoming. We know about that. They'll give us direction of interest rates. Currently, as priced into the bond market, we have an 83% chance. It doesn't seem like the bond market is reacting at all to the housing data, which is fine. It's not a huge report. Let's see. Okay, it's upticking a little. Not seeing anything. We'll revisit it in a minute. You have the building permits, housing starts today. That's this report right here. Okay, here we go. Ooh, look at this. Wow, the number's looking good. Look at this. This is a great number, man. Permits mixed, but the stats, the annual rate, look at that. That's good. A lot of housing starts. It's not bad. It's not bad for the economy. This is a much better number than I thought that we were going to get. So this is good. And this is mixed. It's mixed. It's not too bad in between. So the number is pretty flat. And you can see here the bond market in real time is having absolutely no reaction. Let's see if the Dow has a reaction. Minimal. SPY, minimal. Yeah, no reaction. Look at that. Talk about a sleepy news, right? Yeah, starts up, permits down, exactly. Still much more trust in his word than in Trump's. Well, he doesn't have any political motives or ambitions. He's like a record keeper, so he doesn't have any incentive to tell us that they're meeting unless they're really meeting. He's got no bone in this. He couldn't care less if they do or not. You know what I'm saying? Um, so yeah. All right, let's continue. So the news is pretty much a nothing burger. Okay, a nothing burger. Let's see here. Let's see. Good. Okay, let's continue. That's about as much news we're going to get. Bowman's going to be speaking at 2 o'clock, but that's about it. Today we're going to be focusing on, we already had that, Home Depot, MDT. Keys is not a big enough stock for us to, as you could see right here, look, Keys. It's just not a big enough stock for us to really do anything. It's an S&P 500 stock, but it's just not a big stock. It doesn't have a big market cap. It's kind of on its own. I don't think it's going to be a major catalyst, and it's really not doing much right now. Okay, let's continue. Europe got a little tailwind. They got really happy to report. Does that negate it as a catalyst? It's just nothing. It's not a cat. It's not. Well, it is a catalyst because it happened, but it's just showing you how the market is just very, very. It's not finding it as a surprise, Richard. It's not. It is a catalyst, but the catalyst is just showing us that the market doesn't want to react on it. Basically, very, very choppy. Very, very choppy. A lot of choppiness. Yeah, Eagle Beagle. We'll see. We'll see. Roblox was on fire yesterday. So again, mining stocks outperformed on Tuesday. Limited gains, defense slumped, weighted down by news of a potential Ukraine-Russian summit, hopes of de-escalation, demand for military. Obviously, military is not going to do great. China's been on fire, taking a breather after hitting a 10-year high. Don't get too excited. It's been doing nothing for the last 10 years. So take a 10-year high is not that big of a deal because it literally has been just sitting there doing nothing. Technology and energy stocks slumped on Tuesday. At the same time, liquor and rare earth stocks outperformed. Now, don't get too excited about China making a 10-year high because China has been in a deflationary environment and US has been in an inflationary environment. Together, they offset each other. If China gets out of the mess they're in, they're not going to be in a deflationary environment, and that's going to create more stress for U.S. markets, okay? Because Chinese economy is going to become stronger, and we're going to have to pay more to get Chinese goods into U.S., so our import costs are going to increase if China continues doing better, if they continue doing better, assuming all this is true. We can't trust them too much. Japan gave up earlier gains, closed lower as investors booked profits on concerns that the market maybe climbed too far. Well, they've been making new all-time highs almost every day here. Okay. All right. And catalysts, Intel, Palo Alto, Caterpillar, and as you guys all pointed out, we have now more because Mr. Alexander likes to update this throughout the day. So now we have more things here. Now we have Caterpillar. Now we have Home Depot. We have this. We didn't have Home Depot in the morning, but let's see Home Depot how it's doing right now. Good, good. It's doing good. It's up a little bit. It's up $5. That's really good. That's good for consumer stocks. That's good for consumer stocks. Very good for consumer stocks. Bond market flat. I mean, talk about flatness. Look at this. Just nothing. I mean, slightly going down, but this is random. Folks, we're in a very, very random land. Now, what gain should one aim for on their trading account? It depends, G-Boss, how much you're leveraging. Your gain is a result. How much you make on your trading account is not a result of how good of a trader you are. It's how much you use how much volatility you want. So you know what? I'm gonna bring this up today in the VIP room. Let me make a note on this. Okay. So I want to explain. I'm going to take a minute to explain this to you guys because a lot of you don't realize this. But G-Boss actually pointed up a good question. So let's say you have a strategy, okay? And let's say you took 1,000 trades and your strategy was 80% profitable and you have a profit factor of 3. That's an amazing strategy. But let's just say that's what it is, okay? You have a baseline. You have a baseline. Your baseline has a certain amount of drawdown. Your drawdown is open loss compared to your open profit. Open loss compared to your open profit. Okay? G-Boss, you should listen to this. I'm going to change how you think about the markets in about 30 seconds. Once you determine what your drawdown is, it becomes a volume button. How much money you want to make becomes a volume button. Let me explain to you what that means. Let's say we find out that you average 25% year, average 25% per year gain. and your risk, your biggest drawdown was 15%. Well, if I want to double my risk, my drawdown will be 30% and my gain will be 50%. You understand? All I did was turn up the volume. The music, the album, the record is already made. You understand? So once you have a trading strategy and you know what your risk to reward is and you know what your Sharpe ratio is, you're just tuning up the volume and tuning down the volume. Tuning down the volume or tuning up the volume will not impact the quality of the recording. It'll only make it louder or weaker. So asking somebody how much money they can make is a retarded question, because how much money they make if they're a professional trader is a 100% function of their risk. So let's say that I make, now let me drive this point home to you. Okay? Let me drive this point home to you. Remember this lady right here? This Meshuggah lady right here, Kathy Woods? Okay, let me talk. I'm going to explain to you what I just said in a practical sense. You should pay very close attention and listen very carefully to what I'm saying right now, because 95% of you have no idea what I'm talking about, but you don't even understand how important it is. Okay, so how did Kathy Woods become, in her mind, how did she become a genius? Okay, how did she become a genius? By doing this. When I looked, when she was outperforming every market, every tech company by a factor of 3 to 1, I looked at her drawdowns. I looked at her Sharpe ratio. She was basically trading a triple leverage NASDAQ. So when it's time for the market to fall apart, she fell apart really, really hard because her leverage was 3 times. She was basically trading a triple leverage NASDAQ. So here's a short way for you guys to understand what I'm saying. You know how if you trade the NASDAQ double leverage, you're just going to get twice as much leverage? You're going to get twice as much gain and you're going to get twice as much loss? That's how gains work. Don't ever, ever, ever ask somebody how much money they make. Ask them how much money they make in light of how much risk they take. Your drawdown, this determines this. So if I have a system and I'm comfortable taking a 10% drawdown and I'm averaging 20% return, all I have to do is double my leverage and I'll make 40% return, but my drawdown will be 20%. So when you ask somebody how much money they're making, don't be stupid and ask them how much money they're making net. Ask them how much money they're making in light of the risk they take. There's a formula for that. It's called MAR ratio, MAR, maximum adverse risk. The MAR ratio was invented in early 2000s. Why was it invented in early 2000s? Because in early 2000s, hedge funds used their average gain and their average loss to create a ratio. But after the early 2000s, commodity funds went BK because their leverage more than 50% and they clipped. So they started using a modified MAR. They started using the most downside you moved in the last, say, 5-10 years versus your average risk. So to compare them, so to answer your question, the way you find out how brilliant of a trader is to ask them what their MAR ratio is, not ask them what their returns are. Because if they're taking 80% risk, if their drawdowns are 80%, then you can expect their gains to be 100%. But if their drawdowns are 10%, you can expect their upside to be 15-20%. Your upside is a function of your downside. You guys don't understand this yet. I will explain this in great detail to you, but you need to understand what a MAR ratio. Now, if what I just said went over your head, think about how much you don't know yet. So why did Kathy Woods make a lot of money? Because she was basically buying highly correlated stocks in the tech sector, and they were all going up. And she was making the same amount of money she would be making if she bought a triple leveraged NASDAQ 100. The problem was when those same stocks started going down, her downside was 3 times that of most hedge funds. Moral of the story is how much you make is a function of your risk, assuming you have a trading strategy. And number two, always know that if you're trading correlated position, you're just leveraging yourself like Kathy is, which is why I always tell Omar and Richard, guys that are making $200,000, $300,000, $400,000, $500,000 at a clip, to watch their correlation. because correlation will give you that leverage without you understanding that you have it, and you're going to think you're a genius trader, but in effect, you're just trading multiple positions in the same sector. Now, what I just talked about is advanced stuff. I know it went a lot over your head. Please rewind this video. Here's a link and rewatch this video. The things that I'm talking about are things you're not going to learn from the average Joe Schmo here. That's exact. I'm going to explain it today in great detail during lunch. Okay, I'll explain it during lunch. David Marshall, that's real institute. What I just talked about was real institutional trading stuff that they don't even teach regular folks. But you need to understand, if you buy Nvidia, AMD, let me dumbify it for you. Okay, if you buy AMD and Nvidia and Micron, and if chip stocks go up, you're going to make 3 times the amount of money you would make if you just bought one of those stocks, and you're going to think you're really smart. The problem is when those 3 stocks go against you, you're going to lose 3 times as much too. So she became a brilliant trader because people didn't really, retail traders didn't really care. They just cared about making money. But when they realized that she was basically trading a triple leverage NASDAQ with small cap stocks, they all fell away. So don't do what Kathy does. And always don't ever ask traders what their gains are. Always ask them what their gains are in light of their drawdowns. Okay? And I'll talk about that today extensively at noon. I'm giving you guys real important stuff here. I'm giving you guys really important stuff here. Okay? Really important stuff. I'm not giving you like some cockamamie shit. I'm giving you some really important stuff. By the way, I got good news for you. The bond market's going higher. Okay? Means yield is getting lower. That's good for the stock market. So just FYI. All right. Markets are doing nothing. Remember at QQQE yesterday? I showed you this yesterday. This is yesterday's trading action. A lot of high probability trading here, right? All right. So we broke this down. Let's talk stocks now. Let's talk indexes. What did I tell you yesterday? I gave you a good long lesson in why I believed the markets were going to be dead yesterday. What did I say? See, look what Omar and Richard says. I'm paranoid about correlation. Look what Omar says. I still need to improve. These are guys that are making 200,000-300,000 a month. Correlation is a big red flag. I'll talk about it today. We'll talk about it. We'll have a fun session today in the VIP room. I promise you guys. Here's the link for that. Now, folks, gurus who don't have institutional trading experience, they don't understand anything that I just explained to you. It would just completely go over their head. I'll explain it to you later today. I'll show you some graphics too. Please rewatch this session. It'll be helpful. And here's the VIP. Here's the link for Customer Service Live. Please watch this part that I just talked about. Please watch it several times. I'll talk about it in detail today. So we have 63 stocks. We have 81 stocks making 20-day highs. Where did we come into the market yesterday? 118. But where were we 2 days earlier at 470? Coming into last Thursday, we had 470 stocks making 20-day highs. That's a 1-month high. Right now, we have 81. 81. We went from 470 to 81, and downside 61. Now, let me show you something where we were here. We were 63 coming into this day, or 36, and we only have 63. So they didn't come down here. They basically went to randomness. They went from making a 20-day high, not to making a 20-day low, but just going 20-day high to randomness. This is random trading action. This means there's no stocks moving higher and there's no stocks moving lower. But Roger, you're a professional trader. You got to squeeze out stocks that are making money. Folks, how the F do you surf if there's no waves? Please explain to me, how do you surf when there's no waves? Do you expect us to make money on moving stocks, on momentum when there's no momentum in the market? Good luck with that. Good luck with that. But Roger, no, there's no momentum in the market. How about stocks making 90-day highs? My favorite list. Let's see. Let's see where we are at today. Oh, 75. Let's see where we were 2 days ago, 3 days ago. Wow. 391 last coming into this is Wednesday night coming into last Thursday. And look at it right now. 75. Folks, do you think we're going to get a lot of directional bias? How about breaking down? Oh, 25 stocks breaking down. So did those 398 stock or 391 stocks that were up here come down here? No, they just went like this. They were like this, and then they went like this. Why is this important? Do you remember how much time I spent on it yesterday? And what did the market do yesterday all day? Look at QQQE. I mean, this is priceless, right? I mean, look at this. This is the equal weighted NASDAQ right here. This is when you take the mags away. And here's the mags, by the way, in case you want to look at them. And here's the intraday. I mean, the daily. Here's the daily. Just keying off the 8-day EMA for the second day in a row. Choppiness, no directional bias. How about the Dow? Keying off the 8-day EMA, just choppiness, no directional bias. Choppiness, 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 choppiness. Good luck making money with that. Trade on how long the waiting surfer can balance on the board. The day trade right now to I trade more. There you go. The current open position, I have 7 and 3 of Rogers. Just counted my current open positions. I have 7, 3 of Rogers. And I know which ones you have. You have Roblox, you have Royal Caribbean, and you have JP Morgan, Richard. Tell me if I'm wrong. That has done for me is trade less. Last year, I would have been up to 30 positions at open. Very hard to manage. Now I may have 6 to 8. Richard, next year, you'll get to 2 or 3. You'll see. Trust me, you will. Rod, small gains are not gains if they come at a big drawdown. Remember, it's the amount of risk. It's the amount you make in light of the risk you take. That's what I'm trying to explain to all of you folks. It's how much you make in light of your drawdown, in light of your risk. That's the equation. Not how much you make, how much. Let me show you. Let's say I buy stock at 100. It goes to 50. And then it comes back to 100 and I liquidate it at 101. I just took a 50R risk to make $1. That's not a good risk to reward ratio. So it's because eventually, if you give yourself enough risk, you'll have the upside. Because markets do this. It's how much you made in light of the risk you take. How much you make in light of the risk you take. And once you have that formula, it becomes a record. It's already made. You just have to turn up or down the volume, okay? I'll explain that today. Why do you have to tell everyone? It's because markets are not doing anything. Just want to have a little fun. Can you see surf where you're at? No, I can't. No. I'm across the street from the Beach Herald. All right, let's see how many people we got in here. 692. All right. So let's talk technicals, okay? Let's talk technicals. I know you guys love when I talk technicals. Let's talk technicals. Okay. Do we have a clear shot? Do we have clear directional bias? Or are we mixed up? Well, let's compare. Let's go back to last Thursday when 490 stocks were making 1-month highs. So semiconductor, interest rates, 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 interest rates. And if you go a few days before that, look at how this thing was. This right here. So I want to give you an example. I want to give you guys a good example. Sometimes, Amos, depends. So let me give you an example. The market gets directional bias on Tuesday, right? And by Thursday, we have 490 stocks making 20-day highs. Do you see what happened? So 2 days before stocks peak out, this is what the market looks like. This is last Tuesday. The market peaked out last Thursday. This is what it looked like. This is why we look for clarity. Because when we have clarity, we can get a directional move because they're all aligned with each other. Okay? Really, really important. Yes, I care about it, SJ. That's the difference with institutional traders. Okay? So let's continue. Let's continue. We're doing good. We're doing good. And I don't have to go anywhere because Matt has COVID and I'm working from home today. And so is he. Let me see if he responded to me. No, he hasn't. So when you see something like this, you have clarity because when you have institutional money buying hedge funds or ETFs, the same ETF that has semiconductor will have technology and consumer discretionary. So it makes it easier. When you have something here and something here, they offset each other. You understand? So look at that clarity. This is clarity right here. But look at it today. Semiconductors here, QQQ's here, technology's here. Do you see that? Look where semiconductors are. Look where technology is. Look where QQQ is. Are they all here aligned? No. You have healthcare here. Healthcare is not interest rate sensitive. You have the Dow here. That's blue chips. That's not tech stocks, material. So you see how all the stuff that was up here is now all the speculative, the big runners that were here are now spread out. If you don't see it, let me show you again. Let's go a week ago. QQQ, Bitcoin, QQQ, retail, home builders, QQQ, semiconductors, technology, right here. It's all here. Now let's go today. Technology, semiconductors, QQQ. It's not up here. You don't have that clarity. You don't have that clarity. I do, G-Boss. I look at both because I want to strip away the market cap. I don't want the mag. And G-Boss, I've talked, good question, but I've talked about this and I've answered this question a gazillion times because we want to see what the market looks like when you strip away the mega caps. And a lot of times it diverges. It was very divergent till about a few days ago. See how mags are looking right now? Look how QQQE is looking right now. Look at the daily chart. Look where QQQE is, and look where mega caps are. These 7 stocks will not drive the market. These 100 stocks will. RSP. Look at RSP. Just chopping around. Look at SPY. Chopping around. By the way, off the 8-day, we're keying off the 8-day. The level on the 8-day right now is 641.40. On the QQQ, we're right at the 8-day EMA right now. That level is 570.585. We tend to bounce off the 8-day. We either break through and hit the 15 or we bounce off the 8-day. Okay? Very important. SMH, what is it looking like right now? Chop. Again, we're right at the 8-day EMA. Looks like we're coming back up to the 8-day EMA. What pattern is this setting up to be right now, folks? Can anybody tell me? Yeah, I don't mind good questions. G-Boss is asking good questions. What is this setting up to be? When a stock is making a swing high and bouncing off the 8-day EMA, what do we call that? I know there's an 8-second delay here. What do we call that? It's an A-line. Exactly. So if SMH closes above the 8-day EMA today, you'll have an A-line to the upside on SMH and probably half of your favorite stocks like NVIDIA and AMD if I had to get, yeah, right here. So keep an eye on SMH today. Now, somebody asked me, what's the strongest sector today? I showed you that right here, home builders and healthcare. Home builders, healthcare, retail, right there. Right here, as of last night. This is actually not that bad. It's actually not that bad. But I prefer to see technology, QQQ, and Bitcoin, and semiconductors all up here. Here's how it's supposed to look. Communication, consumer discretionary, QQQ, technology, semiconductors, and Bitcoin all together. Like we had like beginning of last week, I think. That's what it's supposed to look like. Okay? All right. All right. So sectors are fragmented. We're in August. Today's Tuesday. Tuesday is not as bad as Monday, and we did have some Fed data today, and the bond market is starting to turn a little higher. Okay. The market is not looking too bad. Volatility is near historic lows. Let's see. Volatility is still near historic lows. There's no panic. We're not in panic mode right now. There's nothing going on like that. In terms of the indexes, if you look at the Dow, we're all looking at the 8-day EMA as support right now. 44,748 on the SPY. That level is 641.28, give or take. On the QQQ, that level is 576, 576. On RSP, I like how RSP is looking, by the way. This is looking good. But again, choppy, range bound, not a lot of directional bias, not a lot of stuff going on. And the bond market too, you could tell when the bond market, remember the stocks get their mojo from the bond market. So if you don't see me doing anything, just holding positions today, that's because Matt, it's focused on swing and intraday, not on value. Good question. We don't focus on value. We focused on intraday and swing. And we're about 75% technical and 25% fundamentals. Okay, let me give you my favorite stocks for today, okay? Bar chart seems to be working okay today, so I'll use bar chart. These are my shorts. I always give you shorts first. By the way, I want to apologize because the back office has been posting my shorts as longs and longs as shorts. I always start out with the short side. Okay. I don't know why, but I always have a better feel if I start out with the short side. So the back office has been sending you telegrams or whatever and giving you shorts, and all of my shorts are longs and all of my longs are shorts yesterday. So you can probably see that by the slope of the trend. I apologize for that. I'm not doing that on purpose. My back office did that. Okay, let me give you this is the VIP room. For all of you who are coming in here right now, I'll be talking about how your leverage determines gains today in the I'm going to teach you something that once you learn it, you will never ever it will never forget it, and you will be using it for the rest of your life. Every time somebody tells you how much money they make, you will never ever think of their account the same way again. Okay, after today, I promise you that. So I'm going to talk about the biggest hurdle that gets in the way of success for traders, why stocks and indexes are apples and oranges. You can't trade stock and stock options the same way you trade indexes. I'm going to explain to you why. And after yesterday, it's going to build on yesterday's session. If you haven't listened to yesterday's session on rhythm, energy, and rotation, you should. Okay. Why we can trade indexes against the main trend, why we cannot do that with stocks. My favorite setups for day trading stocks and options, my favorite setups for day trading indexes. How to use market internals to help you with all of that. And very important session. And again, why leverage determines your gains if you're a professional trader. Okay. So these are my potential shorts that I'm giving you right now. And that's the link. I just gave you that link. Okay. There you go. And here's customer service live. Folks, a lot of people have customer service questions. Cam and Gustavo can help you every step of the way. Please visit between 10 and 1 p.m. Okay, these are my shorts. AR, OKE. Notice there's a lot of these energy related stocks are taking a dump. Also because of the potential cool off to the war, UPS. My dog was trying to chase the UPS truck last night. I'm not kidding. I'm serious. CL. A line to the downside as soon as it breaks 84. It's got to break 84. Until it breaks 84, you have nothing. But then it becomes an A line to the downside with a target of right here. Okay. VRSK. And if some of you are new or if some of you are not experienced, I reinforce what I talk about all the time. So you will get better at this. You want me to move over to TC 2000? Sure. Here. I can move to TC 2000. If it makes you feel better, just look at right here, the dailies right here. Okay, so AR, that's OKE, that's UPS right here. Again, we want right here. We want to break below this level. I'm going to put an alert here for myself. Breakdown 1 week. This way I get to work while I get you guys here at the same time. Same thing here. Let's break this down. Create a price alert. Good idea, Jeff. Thank you for that. Breakdown. Okay. VRSK. This has to break down below right here. I'm literally giving you these price levels right here. You can always rewatch this, folks. Here's a link to what we're watching right now. This is a link to what we're watching right now. You can always rewind it, play it back, listen to it twice. CPT, also an A line if it breaks this level. And you don't want to do these early because remember, markets are choppy. So you don't want to do anticipatory trades. You don't want to do anticipatory reactive trades. Your win rate will be bigger, but your win rate won't be as big. IEX right here, a little bit lower. Notice all of these are in chop, and I'm waiting for them to start breaking down before I do anything. So I'm setting alerts. All I'm doing is setting alerts on these, okay? Yeah, thank you, Christopher. Yeah, I think we got over 700 today, actually. Okay, let me continue. Now I'm going to do the upside. Now I'm going to do the upside, okay? So just so we're clear, let's do the upside. VKTX. Nothing on this one. Nothing on this one right now. It's too much volatility right now. Sophie. That's a beautiful stock. Irene. That's a beautiful stock. TSCO. Very nice looking grinding stock. STX. Very nice looking stock. Hood. Now, Hood is correlated to Sophie, just FYI, but financial stocks. I don't know why. I don't know why this is, I'll do it later. I don't know why this is so dark. I need to make it a lighter. I can hardly see it. Hut. Hut looks good. And Aura. Those are my stocks today. You're welcome, Omar. You're welcome. Yeah, if you guys go to the Telegram channel, the main Telegram channel, there's a note from Bugs that Bugs sent out earlier today. I just posted it. Just posted it a minute ago. It's on the main Telegram channel. This is the note that I told you the first thing I read today. How Bugs made 112K yesterday, following us on 23 trades. He was scalping, which is good yesterday. But so it's all here. It's all on Telegram. Everything he did, it's all here broken down for you. Okay. Thank you, Bugs. Appreciate it. So these are my watch list stocks. If you want me to give them to you again, here's the short side. AR, OKE, UPS, CL, VRSK, CPT, IEX. A lot of these shorts are not ready yet. That's why I set alerts. I want to see them break down. You don't want to anticipate. You don't want to do a lot of anticipatory trades in the choppy market because you'll get chopped. To the long side, VKTX. No, forget this one. Forget this one. It's got something's going on with this one. Sophie, Irene, TSCO, STX, Hood, Hut, Aura. Okay. All right, folks. Here is the link to VIP room. This is going to be the last time I promote it here. I mean, today. And I'm going to be talking about a lot of really important differences when it comes to stocks versus indexes. And it will bring in a lot of the discussions that we had yesterday in as well. And here's the link to Customer Service Live. Now, let me give you my overall consensus for today. We may have a little more rhythm today in the market. We may have a little more volatility, although I'm not holding my breath. Look at the range yesterday. Look at the meat of the move yesterday. And this is where we are right now. We may just hover around the 8-day EMA. If we hover around the 8-day EMA, that means markets are bottoming out and waiting to start turning back up like this. What we don't want to see in the SPY is a breakdown of the 8-day EMA. We don't want this coming down here. We don't want to see this. We want to see a bar, a thin bar like this right here, or like this, touch the 8-day EMA and make a bottom right here. That would be ideal. Okay? That would be ideal. Thanks, Harold. Yeah, so far so good. We'll see. We'll see. So far so good over here. But so that ideally, that's where we want to be. QQQ's already there. We don't want this breaking further down. We want it to bottom out here. This is what I was talking about on the SPY, by the way. See this right here? This is what I want to see on the SPY. But you could see, look at the bars. Look at the meat of the move last week. Look at the size of these of the meat, and look at the meat this week. Look at the size of this bar yesterday. That's really narrow range. That's very little momentum. Okay. So today, it may be a very choppy day. I'm not looking for a reason to trade. I'm looking for a reason not to trade. You guys understand what I'm saying? Remember what I told you in the VIP room. When we have a lot of volatility and a lot of energy, markets are a lot more forgiving. You could do a lot of, you can get away with a lot of things you can't get away with when markets are doing this. Okay, volatility allows you to have a lot of, gives you a lot of freedom to get away with a lot of crap you can't get away with here. You can't get away with anything right now. We can't pull a rabbit out of our ass right now. Okay, so we got to be extra careful. Okay, be extra careful. I'll be updating you throughout the entire day. I'm going to be sitting in this chair for the next 9 hours, updating you throughout the whole day. I'm not going anywhere today. So I will, time frame for the bottom on the 15-minute. Let's see here. Oh, right now I would say right here. Somewhere right here, Jeff. About 642.32. Okay? All right. All right, guys. If you guys have any questions, please send me an email. Here's my email address, roger@rogerscott.com. Okay? And again, VIP room at noon. You would be out of your freaking mind to miss it today, and I'm not kidding. You would have to be insane to miss it or just not available. All right, guys. I'll see you later. Please, please, please. Half position size, small bets, no correlation. Stay out of trouble. Go do something more fun than trade. This is the lowest risk time of the year. Notice we're not really doing much. We're kind of just playing around. A lot of bonus trade. This is not the time to get busy. This is the time to relax and get ahead of the next couple of weeks because things are going to pick up in about 2 weeks, a week and a half, 2 weeks. Things are going to pick up. This is that lull. This is that lull of the year. You got to be careful. We don't have a lot of commitment from institutions, and institutions is what moves the market. Bye, guys. I'll see you later. This was a fantastic session. I was able to go late because I don't have to go anywhere. I could just work here. Bye. Have a good day, everyone. Thank you. Thank you for being here. What a great session. Bye, folks. Boy, I could just sit here and talk to you guys all day long. Maybe one of these days we'll have like a full day session where I just trade live with you. Bye, everybody. Have a good day.